Okay, let's unpack this. We're doing a deep dive into preparing your Canadian income taxes, really guided by this detailed checklist you've shared. The mission for this deep dive, to kind of cut through the complexity, pull out the key info from your material fast, and, help you feel ready to file.
Exactly. Think of it like a map for Canadian taxes. Your checklist starts right at the beginning with the essential personal details the CRA needs.
Right, it's more than just your name. It really flags needing your SEN or ITN.
Yeah, those identifiers. But it also points out how crucial your marital status as of December 31st actually is. It seems small, but it's not.
Why that specific date? Does the checklist get into the ripple effect?
It does, yeah. It highlights that your status then determines eligibility for things like the GST/HST credit or maybe the Canada Child Benefit for the whole next benefit year. And getting the details right on your spouse or dependents, like the list says, that's vital for calculating family net income. So many credits depend on that.
Okay, so it's one of those details that's easy to gloss over but has big consequences.
Definitely flagged in the material as impactful.
And navigating this, it means looking back a bit too, doesn't it?
It does. Your checklist is clear. You'll definitely need info from last year's tax return.
That's where the Notice of Assessment, the NOA, comes in. The checklist calls it a source of golden nuggets.
Yeah, gold nuggets is good. Because it holds key numbers like your RRSP deduction limit, super important for this year's contributions, but also those carry forward amounts you really don't want to miss.
Right. Carry forwards. I bet lots of people leave those behind. Your list specifically mentions things like unused tuition credits.
Exactly. Tuition credits from that T2202 form or maybe capital losses, even charitable donations from past years you can use now. The NOA basically confirms what you've got banked.
Okay, so here's where I think it gets really interesting, and your checklist spends a good bit of time here. Income reporting. It's not just about the T4s.
Oh, absolutely not. It's about all income.
That's a big one. The material is very clear. This includes income that doesn't arrive on a neat little slip.
Like tips, maybe income from self-employment, or that side gig you have.
Or rental income, foreign income.
All of it. And the checklist emphasizes the responsibility to track and report that. It's squarely on you, the taxpayer.
So how do you even track something informal, like tips, based on the checklist?
Well, it really stresses just diligent record keeping during the year. Could be a simple logbook, notes in a calendar, maybe a tracking app, whatever works. And that leads right into the next huge point in your material: documentation. You need the backup.
Right. For every single deduction or credit you want to claim, you absolutely need the receipts or the paperwork.
The CRA's approach, as your notes highlight, is basically show me, don't just tell me. Claiming medical. Have the receipts, donations, need that official slip.
And the checklist gets specific too, right? Like needing the caregiver's SIN for childcare receipts.
Exactly. Or sometimes needing that signed T2200 form from your employer if you're claiming employment expenses. Without the proof, the claim likely gets denied.
Okay, and buckle up, because the checklist also dives into some special circumstances.
It does. Like, for instance, if you owned specified foreign property.
Yes, the over $100,000 Canadian cost threshold at any point in the year.
Correct. Your list points out that triggers needing a whole separate form, the T11-135. It's an easy one to miss if you're not aware.
And here's a big one, the checklist flags. Partly because it's a change from years ago. Selling your principal residence.
You must report that sale now. It goes on Schedule 3 when you file.
Even if the whole gain is exempt because it was your main home.
Yep. Even then, your material clarifies it's mainly so the CRA can track property sales, but, well, it's a reporting requirement now, period.
Got it. Okay, and finally, the checklist strongly advises keeping, well, everything.
Pretty much. Your filed return, all those slips, the receipts, the documents, keep it all for at least 6 years. Minimum.
Your backup, your proof if the CRA comes asking questions later. So pulling this all together from the material you shared, what's the bottom line? Preparing your taxes effectively means being organized all year.
Definitely proactive organization. And knowing all your income sources, not just the easy ones.
And being ready to back up every single claim with paper. Or, digital paper.
Solid documentation. Your checklist really shows this isn't just a mad dash in April. It's more of an ongoing thing. Staying informed, keeping records.
Right, an ongoing process.
Yeah.
So here's a final thought for you. Thinking about how much this checklist emphasizes the taxpayer's own responsibility for tracking everything. How does staying meticulously organized throughout the year fundamentally change your relationship with your finances, maybe even your sense of control, way beyond just the tax season itself?